You're welcome. Good morning, everybody. This is your host from Price Action Traders here, the Gurua. Yeah, we've really come back to deal with the types of SNR level which we mentioned in the last video. We mentioned this in the last video. So we're going to continue from there. Where is this? Trying to see. Okay. Going to continue from there. Yeah. We'll continue from there. The type of SNR, identified by the Malaysian traders. So we see give them the credits for. It has been for long. It is you people are known to this. You are known to the, but it has not been really treated well. Maybe like exploited in the normal way, the right way. You know what I mean? So we have about five types of SNR that you can use to trade this support and level price action in the market. The first one we have is the most regular, which is the classical SNR, which is this, where the price make a resistance at the top. Yeah, tell you about the open and close. That the focus is on open and close. That means here will be the resistance, and price is looking to do what? The price is looking to break out of this place, then go to the opposite. That is the path. Yeah, price will look to break out of it and start to come down. That is the classical resistance. Price makes the inverted V. Then for support level, it will be the opposite. Price comes down to create a support with open and close. With open and close. So we have price either instantly or in another subsequent move breaks out of this with a wick, break out of it with a wick, then withdraws back inside to close above it. So we have what we call the support be taken out, be raided. Yeah. So that's a classical, which we are going to see here. We're going to give you more examples into that. Oh, it's not this. So that's the breakout, the normal breakout. Where it is. It's normal breakout. So yeah. So this is a classical. This is the classical. So this is resistance level. Price moves higher to take it out, then start going downward. Yeah. So here, that means here will be the accumulation, then manipulation, take out the high of that resistance area, then start going down. Then this is support. Have this as support. Price break through it, then close above it. Anywhere price break through, then close above it. So you have the support level. So that means price is going to move higher. That is the belief. Here, price is going to move lower. That is the assumption. Yeah, price is going to move lower. So you can see it in the chart. In the chart here, you can see it. Price moves higher to take out this, then start selling. So price moves. Whenever you see this in the market, either at the bottom or at the top of a rally, at the bottom of a decline, price decline, is telling you a reversal. It's supposedly we call it a reversal pattern. It's a reversal pattern. of SNR, it's a reversal pattern. So we use it for price reversal. So here, this is a classical SNR. Any moment price comes later to breaks and take it out, and you start seeing, or closes above it and below it, you start seeing movement downward to the opposite. This is classical. It's classical. So you can go to your chart and start identify them. As price close below it, then it moves downward. This is classical. This is classical. Price close below it. Sorry, above it. This is support level. The price close above it, then it starts moving higher. This is the classical. Price touches it here. Then it moves. It withdraws back, but finally break through it. This is classical. This is classical here. With support level, great support level here, and price comes in. And you see the withdraw, the price rejection above it, then close started moving higher. This is classical. This is the resistance level. The price withdraws back inside, then start going down. Then we have this as another classical. Price moves above it to read off the resistance level. Those stops there, then going downward. So that is the classical. Then we have the other type that you can have a gap. You can have a distance between the two SNR. That means before price will likely. Those are the most significant ones. The most significant ones. Most significant ones, yeah. So you see the distance here between this and this. This is see it here. This is so the classical type, and the most regular in the market, most regular. You find it every now and then, in each level of price action. Yeah, it could be 5 minutes, it could be 1 minute. So that is the classical type. Let's go back to so we have the classical type like that. It's most regular. Just go open your chart whenever you see price making resistance, then another price comes to take it out. That means the message is that it's going to the other side. If it breaks out of it, that's a breakout. So price will reverse back to take it out. Then this is the gap level. The gap level. The gap level. Yeah, the classical type. So I really want you to master this very well. We may not be able to touch the number 5 because that one is more. It's not as regular as this, but the most regular ones are what we talk about. And if this is the support area, if this is support level, the resistance level, price may in the future or in another time of coming higher, it will take it out and going down. So you see, this is the open, this is the close, this is support level of SNR. Price looks to take it out, then move higher. So whenever price takes this out, So we expect an opposite direction. So if it takes out the resistance, we expect price to start selling downward. If it takes out the support level, we expect price to start selling upward. So that is the message. So take note of that. We're going to make use of that. Then we have this, the open and close is the second one. The open and close means the gap, the gap, the gap. Yeah. So you know one thing about a candlestick is that you must know about candlestick is that the open and close of candlestick indicates a gap. There's a gap in like kind of imbalance in the price market, a kind of imbalance, a kind of imbalance. If price move higher, then it moves in another level. It moves in the same bullish candle, continues from there. It opens there, then close higher. So that means this place, the distance between the open, sorry, and the close, that is the close, the first one closes here, then the second one opens there. So the distance there between the close, the previous close and the reset open indicates a gap. A gap. Yeah, an equilibrium level. A gap. So this place will indicate what we call a gap. A gap. Gap SNR. A gap SNR. Yeah, a gap, a gap, a gap. Open and close. It's very, very important. Please take note of it. Very, very important. Whenever you see this, the first is bullish, the second one is bullish. The difference between the previous close and the new open price level is what we refer to as gap, because there is a kind of battle between buyers and sellers. There, one push it higher to this level. Probably you may see a wick here, like this. You may get a wick there, then another wick comes down. We have a wick here, then another one like this. So price moves higher. That is the message. That's what it indicates. You have this, this is it, gap. Then price moves lower, then start moving higher. So this place and this place becomes what we call a gap. A gap. You have featured this if you know about decision level. Yeah, So it's most regular to like the classical SNR. So that means this place has created what we call a support level. This represents a support level because price leaves out here to create a support. Then a kind of movement to it will indicate price will likely go to come back and touch that level before it starts moving higher. Yeah. So this is where you are going to a new buy at the level of this touch, a new buy. It could be a candle after, or it could be at immediate level. The price will come to hit at this place. You will see it. We will see what we mean by that. So if this is a bearish candle, then we have another one. Oh, sorry. Another one like this. So that means price. What's the message here is that the price moves from that top to this level. Try to withdraw back here. It closes back inside. Then the second session will open. If it's coming down, it will first go up. I told you about the movement. It will just go up, then started, it will start moving lower. So this place, between this place and this place, we want to call a gap. Yeah. So I mean this place is going to represent by a week. This place is going to represent by an upper week. This place is the lower week, right? So this thing here is that price will likely go to come back either at immediate reaction or subsequently. It will come back to teach that level and that break through it. If you could not break through it, it will hit this level and start selling downward. That is the message. That is the message. So that is what we call the gap at open and close SNR, or gap as identified by the Malaysian traders. Yeah. So let's go and see another example of it. Yeah, it's gap level. Very, very special. I love this so much with the classical SNR. Yeah, my most favorite, SNR levels. Yeah. So we have this as support level. This is the support level, where price will likely come to hit and bounces off it. It is the resistance level where price will come to hit and bounces lower, way lower. So it could be that sometimes price, or most times, price will likely come down, take it out, then close below it. Then, so you are expecting price to move like this and come down. So for sell. So if price break through, if price do not bounce off this level, then you try to break through it. If price comes from down, then it could not, instead of moving like this downward, it starts breaking through it, then close above it. Then we are expecting the later distance to come and bounce it and start going higher. So two types. If it fails to bounce off this level, that means you are going to, if it fails to bounce off this level, I mean, you're going to see a kind of breakout there. Then that results into a breakout. Yeah. So this is the next type of, or maybe we will show it in the chart first. You're going to see in the chart. You're going to see in the chart. It could be. So let's do this first. Okay, let's finish the type. Let me finish up with the type so that I can go back to the chart and show you the examples. Now we have the breakouts. This is another most regular breakouts. I'll call it a flipped SNR level, where means the normal language of a support turn resistance or resistance turn support. So when a resistance level is being taken out, it starts to turn a support level in the opposite side. So when a support level is broken downward, so the next we see is it turns into resistance in the other side. So that means price is going to come down here, take out this place, and start moving back. So this is a continuation pattern. It's a continuation pattern of SNR. Gap 2 is a continuation pattern of SNR. Then while the classical is the reversal type of SNR. Yeah. So price will likely come down to take this place out and this place and call it flipped. Yeah, flipped. So support turns resistance here, RBS. I see it as this guy people tell us RBS. Resistance turns support, and the other side one we have support turns becomes resistance, SBR. So here support has become a resistance level, but here resistance becomes a support level. So this is the buy area. This is the flap zone. Swap zone or flip zone. So anytime there's a break out of this level, so you see a retest into this, back into the level, to the support level. Then we have the head and shoulder pattern. Head and shoulder pattern, which is another most regular head and shoulder pattern, called popularly known as the QML. QML. Yeah, QML. Here it is not as the conventional head and shoulder pattern. That means this thing does not have to be symmetrical. The angle of the left and the right shoulder doesn't have to be symmetrical like the conventional head and shoulder pattern. Yeah, under this SNR, we may have it as a irregular type or non-symmetrical type of head and shoulder. So it could be, this place could be just a little gap between here and this peak, while this could be a kind of wide gap. Yeah, kind of the distance from here to this place will be wider than the distance from here to this place. So this is the peak. So price break through it, break through the take up the previous higher low was taken out. This is kind of a chop, change of character. There's a change of character. So this is a reversal pattern of a SNR level. So this is the QML angle. QML. Yeah. QML. So this is right shoulder, this is left shoulder, and this is the peak, this is the head. So whenever price take out this place could be what we call the chop, or yeah, the chalk. You can see the combination of this thing here of SNR and SMC, the liquidity concept. A kind of a chop, yeah. So whenever the most recent higher low is taken out, a breakthrough it, then there will be a retest into this left shoulder. A retest of it gives here the QML. Then the opposite for buy is the inverted head and shoulder or QML level. So this place will be the QML. Yeah. Take note, this level must sometimes it is slant somehow. It could be slant. You can have it as this. 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 So why this one will come down like this? You can have it as slant head and shoulder pattern. This is not part of the Malaysia. I just discovered this myself. Yeah. I'm gonna show you later. It's most regular too. Yeah, I just discovered this myself. Yeah, it's not part of this. So the normal thing is for Malaysia, it just this. Yeah. Whenever you see Malaysian traders, this is the what they discover by themselves. But I just take and kind of say that a pattern like this exists in the market. It is consistent. It exists in the market. So that's for head and shoulder pattern. That's head and shoulder pattern. So whenever you see it in the market, take note. It's a reversal pattern. It's a reversal pattern. So we're going to see all these things. Then the breakout, we've not talked about breakouts. Breakout. This is breakouts. So I'm trying to see what's happening here. What's happening? Yeah, this is breakouts. This is breakouts. We've talked about breakouts really here. So we're going to see examples. Hmm? We're going to see examples. For example, this is if this is let's take out this place. So you come here, you see this price like this, then you play it once. So this play has created what we call a classical SNR. A classical SNR. This is previously this logic will be taken as what as the support level with this. Yeah, that's taken as support level. Support. At a support level. It's taken as support level. So media place as support level. This is if you go to your line chart, you see it as V. It's as V, right? So this place are what we call the SNR, the classical SNR V. This thing is particular about the line chart is so it's what you can easily use to identify the DC. Yeah, this is the resistance level of SNR. So resistance level of SNR, resistance level. But this would be the support. Inverted V and the regular V. Resistance level. You can go just so you can see that the line chart is concerned about the close. So we use that's why we use if you want to identify we use it. So your focus on this thing I told you in the last video will be on the close, the open and the close, the open and the close, the open and the close. Previous close, then the recent open creates an SNR, not the week. So you can see that here we got a kind of support level here, so now really the classical and price will start moving higher. See a touch of it, can you see the touch of it? Yeah, price touches it here. This place, it was a touch, a kind of taking out of liquidity, the liquidity sweep of this line. So it creates this, and then you start seeing a movement now upward, which is almost about some few people there, almost about 359 pips. You can imagine just in 3 days. In 3 days, 1, 2, 3, 359 pips. So your support will be here below the last leg of this thing, the lowest low. Then once you see the confirmation is that you allow the price to close above it. But if you are an aggressive type, one price tap into this, you get to your maybe sell limit in order in place, stop loss below this low, then you can start capturing 359 in the 3rd day of it. That is for that. Then here we have a let's take this one out. This is the resistance level as indicated by this line chart. Resistance level. Resistance level. It's not from this source. Let's take this out. So now let's take it back to candle. So now we have this as bullish candle. our focus is on this, right? The one that close higher, then this one opens here and close below it, right? So that creates a resistance level. So we are looking for price to do what? Price to come down and retest this place, take this place out, then cause a week with a week there, they start moving downward. So that's our expectation, right? So let's play it forward and see what happens there. You can see it. So this cross what we call a week. This is a withdrawal. A withdrawal out of this level. A rejection. Price rejected this higher price level. So that means that means there was a sweep here, a sweep of liquidity. You can see the combination with this here. So there was a sweep of liquidity there. Call the represented by this. There's a sweep of liquidity there. So that makes it more significant. The sweep of liquidity. And you see that this place there's a sweep of liquidity and price comes in. Can you see it? So whenever you see there is an added advantage, see here, a price breaks through it, and taking out this here, then so whenever you see this, if you add this to yours, it makes it more significant to your checklist. That when price take out this liquidity, then it take out the resistance level, then it close. There's a close, a usual close below it. It must be a close below it for you to sell. You wait for the close, or if you're an aggressive type, once you break out to your stop loss will be here. Then you start to see price moving price moving lower. So your own is to create a short position here. Your price, your district will be here. That's almost about how many pips there? That's 85 pips. 85 pips stop loss. You're going to target so much this here, almost about 856 pips. Yeah, 856 pips. So yes, a swing. You can use that as a swing trader. But if you are a scalper, that means you are going to go lower time frame, like 1 hour. This is daily. You go two time frame lower. So 1 hour or 4 hours to enter your sell. So you can, after the sweep, what happens? You start seeing price coming down. So that means price take out your order, and your order is filled and come back to it again. So this is the first touch. This is the second touch. So you could, if you are the conservative type, that means you can wait for another touch. For another touch. Yeah. Go to break through it. Another touch. So your order is filled 800 for almost about 850. So probably you enter here. That's almost about 765. So if you are the aggressive type, you enter at the top there. At the top, that almost about 840, 842, 842. Yeah. And because we still have another this here. Can you see this? See it here. Let's do this thing there. We still have another, because we still have another a new set of this thing here. We have a new set of SNR here. Can you see that? So there's a liquidity sweep. You see the liquidity sweep of this resistance level. This is if you are known to SMC, which is liquidity concept. This is the other blocks here. This is another block. This is a break of structure. So they create a good other block area. So you can use this knowledge. So whenever price comes to sweep out this level, whenever price hits this level, it hits out. The order is filled, and you see it. The second touch. See it. This is first touch. Then your price, your order is filled for sell now. price starts moving down. Internet. Okay. The order is filled and it starts moving. See price moving downward. So that is the. So then for support level, I've shown you the support level. You can see this place here. See this place on gold on the 29th of June this year. We got this. It's for swing. This is for swing. And use it for swing. So that means your target will be minimum of 500 pips. Minimum 500 pips. This created support level here. So what you have to wait for is for price to take out this thing and move higher. There's going to be manipulation below it, then start seeing price moving higher. So your target will be the next level of the other days. All these are what we call obstacles, which you come to understand later. So for me target, I will target this place. Yeah, target here. For long position, yeah. So if this is where you are aiming price to come in and break through, so this will be here. Your stop loss level will be here. It's almost about how much is that? 135 pips. So your first target is here. It's almost about 700. So the first target is this place, almost about 700 pips. So whenever your distance moving, you take the support to the break level, break even level. So you start playing out. It's tap into. Can you see that? So this level is tap into here. Price tap into it. Then closes away. Close above it give you a good confirmation of aggressive type. You see this and you can break your DC to this place. Once you get a close above it, your stop loss becomes almost 50 pips. Yeah. You not target more than 50. I mean, for your stop loss level, but this is swing at this. So your this becomes some 700 pips, right? So let's see it. You see the price hits out. Wow, great. That's great. So almost about 765 or 766 thereabouts. So that's a good distance for you with almost about 15 RR. Yeah, risk reward ratio 15. So you can see that. So see here, this is another examples of SNR classical. If price breaks through it here, this is, let's cut this out. So we have this as what? As if price comes here, this is open and close, sorry, classical level. Then, wow, see a touch of it. A touch of it. That's for aggressive type. Here we have this as what? As good support level. 1, 2, 2, 2 touch, right? Price touch it again, it moves higher. Any close bill above it. This is it could be 1 minute. It depends on your level of this, how you want to trade. That is, see, this is resistance level. Bullish, then open, close and open. And price moves like anyway, and as long as price does not close above it, so it validates your what? It validates your stuff. It validates your sell. Yeah, it validates the SNR level. Now price does not close above it. Validate yourself to sell. Price does not close above it. This information is fantastic. Price does not close above it. Price comes down. Price does not close above it. It doesn't close above it. comes down. For binary, this is another powerful, this is for you. Price does not close above, below this. Once price close below that, it turns to a breakout. What we mean, so support becomes resistance to the other side. Price moves lower. So price does not close here. Price does not close above this. Going downward. So you can use that as a good information, to continue to sweep. Price close are higher, they go higher. Price does close lower. You see, the next day we have yeah. Then here the future. Can you see that? Can you see the gap? Then we have a hit here, the first touch here. Price moves higher. Here, this is a support level. Can you see? Moves higher. So anytime when your stop loss is hardly hit. Can you see that? This is a breakout. A breakout. Price comes, it tap into it. Then this is resistance becomes support. Tap into it and moves higher. So you see, this is a breakout. So that's for that's for classical level. For breakouts, I'll show you type of breakouts. For a breakout or open and close. Here it's open and close. See it? Here it's open and close. For open and close, you got this as open and close. Let's take this out. See it? Bearish candle closes here, another opens here. So this becomes what? This becomes a resistance level. A resistance level. Not support. Resistance. Resistance level. So this becomes a resistance level for price to move higher and comes down. So we expect price to touch this level and hit our sell order. So taking our sell order then. So that means support becomes a resistance level. Yeah, so it becomes a resistance level. So when the order is filled, they start moving downward. Good point. Here is a good one to play with. It's a good one to play with. Let's take it out. Let's take this place out. It's a good one to play with. Here is a failed one. It doesn't move lower anymore. Start moving here. So here we have good one here. See it? Price tap into this level. This level. Price tap into it. Can you see it? Price tap into it and come down. We have this here. Can you see this? Let's take this out. You see, this is open and close. This is this one. Price tap into it, there comes down. We are waiting for price to tap into this, and that starts coming down. Start coming down, short position. So you buy your sell limit, while your stop loss is above this level. So your next target will be around here. Your stop is about 102. You can reduce more price tap into it and close below it. You reduce your stop loss lower or thereabouts. So we are targeting downward. This is almost about there. 376 pips downward. 376 pips downward. And price tap into it and close below. There's no close above it. There was no close above it. So this is hit below, and what happened? I see price moving downward. So you close your this range, break even level, then seeing price moving downward. So this is another order field for you, and price move downward. So more this thing, almost about 582 pips, 582 pips, or 583 or thereabouts. And there's no drawdown at all. No drawdown. Price does not move higher to hit your this thing. Yeah, your breakable level. I see it. So this is fantastic. Fantastic. You see it in different form. Yeah, fantastic. Open, the price moves higher. Open and close, price moves higher. Open and close, price moves higher. Price moves higher. So fantastic. So fantastic. You can see it here. See it here. Price moves higher. As long as there's a close above that level, this is gap level. Gap level. Yeah. So we're waiting for price. For binary, you know how to time this. I don't know how to time your. You can know how to. You can use this to manipulate the binary platform. This is a sure banker. This is a sure banker. Stop loss, that's 65 pips. Stop loss, your target will be 5. I told you 500, minimum of 500 first target there. So we take it from there and price tap into it. And you see that tap into it, a close above it confirms your order. A close above it. You see that? Breaks through. 500 pips, sharp, in 3 days. You got your decision. In 3 days, 500 pips. That is open and close. Open and close. Open and close. See, open and close. Open and close. Open and close. Looking for, but yeah, this is another one, good one. Fantastic. Good one here. Good one here. Another good one there. So anytime price you get the kind of a this any price tap into you see it here. See good one here. This is most conservative type order. See it here. See it. If you've got this and you see price moving in, you set your buy limit. Set up. Buy limit is set up. This is it. Your stop loss is below the previous edition. Will be here for conservative type for 37, but I want to maintain it normal to allow the trade to breathe. 50 pips. Your next this will be 500 pips. 500 pips. Yeah. So once you see price moving towards this level, you set up your sell limit. So your buy limit. Buy limit. Wow, see fantastic one here. Just like this, what happened here. Then you see price taps to it. Wow, good one. The order is taking. Price tap into it, the order is taking. Just a few pips to your stop loss level. Can you see it? Can you see it? So a few pips. This is almost about this is a 40. That's why I say you should allow 50, at least 50. 50 or thereabouts, or 50 pips. So it's tap into and for 47 pips stop loss, and start playing out for you. And you see that? And because there's a strip of liquidity here. If you go lower, you'll be able to get that very well. Can you imagine? If just 2 days, your 500 pips is hit out. 2 days. I see that, see like this place. No, this place is not it. Not it. Yeah. You got this. See this. 500 pips. 500 pips. 500 pips. 500 pips. See it. 1, 2, 3, 4. 4 days. Get your 500 pips. Sharp, sharp. 500 pips. For pro frame account, you can use this. It's a good this thing for you. I'm looking for another very good one. This is daily time frame. If you go lower, so fantastic in a lower time frame. Yeah, this is a good one. Yeah, see it. 500 pips, 500 pips, 500 pips is what you need. Hmm? A close below this level will give you sharp your 500 pips. Means 1, 2, 3, 4. Here, your 500 pips is hit here. Can you imagine that? 500 pips is achieved here. Hmm? With a stop loss of just few stop loss. Few stop loss. Hmm? So that's for open and close or gap level. We could see this, we'll see more examples. Open and close, 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 open and close. Yeah. So for breakouts, you see these breakouts, these breakouts, these breakouts. The price makes open and close here. Then instead of going lower, it breaks through it. It breaks through it. It breaks through it. Like I told you here, sometimes price will break through it and close above it. That means you are going to do what? You are going to buy in the opposite side when price touch here and move down upward. So our buy will be here, right? As price break through that place, your this is going to be here. Sorry, price has never broke through. Let's price broke through. Let's see a body, a close. When a body moves, but this is so we have a close there. Then yeah, so your next target could be 500 p, 500 p. 500 pips, and the price moves. Can you see that? Takes you higher. Yeah, so it's still going higher. Price is still going. This is recent this is right now, 30th of August, still moving higher. So we're expecting price to come now to this place to achieve our this 500 pips. So you can see that breakout. This is breakout of SNR. This breakout. It was close above. The price moves to retest it. Then you see price coming down, right? Breakout. This is a breakout. Price is tested. Then higher. A breakout. A breakout. A breakout. So a breakout. This is a typical breakout example, popularly called a flipping market. You flip it when price moves to break out a particular level. You flip it for the other side. Yeah. We see a flip. So this play becomes what? It becomes this is the resistance level. It was taken out with a body above a body close above it. Then this place will serve as what? As your buy. Therefore, here, this is support. Whenever time you see price broken through, instead of price tap into it and start moving higher, but it closes below it. So you're going to see a retest into it and it's sell downward. So this will become your sell area. Support becomes resistance, sell area. So that is the typical breakout. Then breakout. So you can see it in your, just go to your chart and you need to see different level of price action because SNR type. A breakout, this is a breakout, price tap into it. A breakout, you see it? A breakout and price tap into it. A breakout, see it? You see it? Price come back into it. A breakout, price comes back into it. This is a breakout, a breakout. So you understand what I mean by breakout now. So it could be just a single candle, it could be multiple ones, like a breakout. Have a breakout there. So this is a breakout. See the good one. Tap into it, then see move. Good move. A breakout. But price never touches it like this, but there was a kind of you are smarter enough to have got that exam. A breakout. See it. This is a breakout. Good one. Price tap back into it. A breakout. This is a breakout. Price come back into it and moves higher. Price tap into this breakout or support. So anytime price tap into a double, we have a double SNR level. This is the first one. This is open and close breakout of open and close. Then we have another one as SNR, the classical SNR price tap into it and see move. This is a good one. See, open and close price tap into it. Then we have a breakout here, price move higher. Just imagine when you have anytime you have a body above this, and you confirm this, you don't even need. Sometimes you are smart enough, you don't need this to, to tap into it anymore. See it, price move back and come down. Yeah, you don't even need most cases. This is a population of probability. See it, price moves higher. A breakout, price tap into this area and moves higher. A breakout. This is a breakout with this body. A breakout. So that is this is therefore for head and shoulder pattern. For this head and shoulder pattern, you see price. Let me soon to like the slant I was telling you. This was for the slant. See the slant. And price moves lower. See it. Be difficult. I think it's not difficult for me. I don't know if it will be difficult for other people. For that is for slant for head and shoulder pattern. This is head and shoulder pattern. Inverted head and shoulder pattern. KML. Can you see that? Change it to let's say it head and shoulder pattern. And price take out this and you sell as price. See because there was a double this here. Price, this is this level, classical SNR level. Price tap into it again and again. And this is going to be your buy there. We have got price close above this. In the right shoulder, we have a price above this, close above it. Then you buy straight to it. You don't need for a neckline to be broken or no waste. You will have wasted a lot of things here. Your confirmation is this place. Tap into this peak and this classical level and open and close, break out, and your stop loss is going to be here. As price move higher, do your stop loss also break limit. That is that. So you can see this. For this is a head and shoulder pattern. I told you it doesn't have to be symmetrical. This is head and shoulder pattern. This is the left shoulder. This is the right shoulder. This is the peak. Price tap into this breakout. A close below it will give you your truth. You can see enter here, right? You can see enter here. But price does not move to this place of classical, but it taps into this. Price tap into this, take it up because it's a fresh. We'll talk about that in next year. This is fresh and fresh everything. Yeah, price tap into that, and because if you take it to a line chart, see it here. Yeah. Yeah. So that's for head and shoulder pattern. Head and shoulder pattern. See it here. See it here. Head and shoulder pattern. It may be just this for you. So if you go lower to maybe like 4 hours or thereabouts, you can see more. Go to 4 hours. Head and shoulder pattern. See it there. See it here. See it here. Head and shoulder pattern. Head and shoulder pattern. You see that? Price tap into it. As long as there's a close above it, see the first tap, the first touch. After here, first touch, a close above it, a close above it. So put your DC almost about how many pips there? Price has moved almost about there. Almost about 160. So 117 pips or thereabouts. Price has moved. Head and shoulder. See this here. See it here. It's supposed to be. The slant I was telling you about, slant there. Head and shoulder. And you have your DC there. You see that? This is the peak. Left shoulder and left shoulder. Price moves. Yeah. So this is the peak. Good one. Good one. Head and shoulder pattern. And see there any type price tap into the level. Take your trade straight. Doesn't have to be symmetrical like the regular conventional head and shoulder pattern. See head and shoulder pattern here. Head and shoulder pattern. Head and shoulder pattern. Price tap into it and then shoulder pattern. Head and shoulder here. Price tap here. This is slant. Yeah, I discovered this by myself. So regular. Discovered this by myself. The enterprise tap into it and you see a close above it. By head and shoulder pattern. You see that? So regular too. And it hardly fails. So when you see a fail, maybe price broke above it, that's what we call the broken head and shoulder pattern. The broken type. Yeah. This is slant head and shoulder. A slant one discovered by me. Slant one. So whenever this is there's a close above this, sorry, a close below it, it gives you your slant, 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 head and shoulder pattern here. It could be 15 minutes, it could be like head and shoulder pattern. Head and shoulder pattern. So we have that as the, so that is that for, we give different there's another, this I would like you to talk about. So that is the type of SNR. Maybe in the next video we'll talk about that. God bless you. Go and do research. Go open your chart and try to see more examples of this SNR level that I've shown to you here. Try to see more that I've shown to you. Yeah. Try to see more examples in your charts. Do your practice. Just open up your chart to recognize patterns. To recognize the pattern. To recognize the pattern. That's not, there's no close below the support level. It validates your buy. And there's no close above, validates your sell. So the more you have, the more gap you have in between between the level and the touch. So the better it is. Yeah, that's what we are trying to represent here. Yeah. Better it is, like for example, this place now. This place was the first touch. And we have the second touch here. This place, no touch, there's no touch. If part of this place, you see the gap. Upright, you see the move downward. So here there was touch, a lot of touch. So as long as there's no close below, so this will become a strong support level. This will become a strong support resistance. I see. So you go to sell here. This place you go to sell, buy. So that is that for now. God bless you.